Holy flippity flip flop flap and smokes, everyone. We have just witnessed an economic sign that hasn't happened since the peak of the Great Depression in 1932. And ladies and gentlemen, when I saw this chart, I nearly fell off my chair. This is showing us there is going to be severe pain coming. Now, I want to address many people saying, Michael, you're a broken clock. Every time you say the market's going to crash, it hasn't happened. Well, people, we are still in a bear market. The market has been crashing. Last year, the S&P fell 25%, the Nasdaq 35%, Bitcoin crashed 74%. The bond market saw one of its worst crashes since the 1929 Great Depression, with bonds crashing over 40%. So we are still in a crash right now. I'm putting on the record, we still are in a bear market. A lot of people are thinking we're going into a bull market now. No, ladies and gentlemen, we are not entering into a bull market. This is just simply a bear market rally. We've seen these kind of moves happen before in this market. We've seen markets, the S&P rally 16%, only for it to fall lower. And people, when the fundamentals are telling us there's absolutely no reason for the market to rally right now, when the Federal Reserve hasn't even hit peak interest rates yet, when the data keeps getting worse, when we haven't felt the full pain of these rate hikes yet, what this is telling me, this is a trap. The big banks are setting up this trap, trying to bring the suckers in. This is a suckers rally, and we're about to get dumped on once we see reality finally hit the markets. So you better believe I'm fired up for this one. I'm going to show you the proof, the facts, and the data, but maybe you and your Tesla stock can't handle the truth. Let's get into it. Look at this, everyone. Like I said, we have just witnessed an economic sign that hasn't happened since the peak of the Great Depression in 1932. Because economic conditions are far worse than you're being told. Throughout the past year, prices have been rising much faster than incomes, and as a result, people's standard of living is falling rapidly. Now, why we have to pay attention to this is because the US economy and a lot of modern economies are consumer-based economies. The US consumer is about 70% of the US economy. So if their incomes are going down, then that means they are going to be spending less. That means companies' earnings are going to become lower and lower. Yes, we have had a mixed bag right now. I think earnings are going to continue to fall in Q2 and Q3. And do you know what's happening right now? More than a third of US adults are relying on their parents to actually pay their bills. But eventually the piggy bank of mum and dad is going to run out because their pension all of a sudden isn't going to cover their cost of living. Their retirement funds are going to go lower, and I'll show in a moment that their houses are going to lose value, which a lot of retirees are going to be banking on in order for them to maybe sell their home to keep up their standard of living in retirement. But look at this piece of data that is absolutely alarming. So I'll bring up a chart here. This is real disposable income. And what's happened during the most recent GDP report has revealed that the decline in real disposable income that we've witnessed in 2022 was the largest it has been measured since 1932. That's right, look at this chart. Real disposable income has fallen off a cliff. $1 trillion of people's real disposable income has been wiped out like that. If you think this isn't going to have severe consequences for the economy, you need to think again. And what this is ultimately going to lead to is companies' earnings, because one person's spending is another person's income. Because I'm sure you've seen my videos I've put out to say this crash is going to rival the Great Depression, and we've just got our first piece of data to say that it is. And the reason why I say this crash is going to be worse than others recently, like 2020 and 2008, is because unlike the market is hoping right now, remember, this market rally is all on a hope, it's all on a prayer that the Federal Reserve is going to pivot. People, the Federal Reserve can't pivot. Inflation is still triple their mandate. We saw what happened in the 70s when they pivoted and tried to drop interest rates. Then they had to bring Paul Volcker in to fix the mess they created and lift interest rates back up to 18 to 20% to finally put the final nail in the coffin for inflation. So we still have at least minimum 2 rate hikes to go. And the markets are thinking when they do their last rate hike, the next month they're going to start cutting. No, that's not going to happen. They're going to at least pause for 6 months until inflation comes back down, and there's no guarantee it will. We still have a lot of things going on around the world that's going to keep inflation very sticky. And what people still don't seem to get is that we're not going to get the data to see how bad it is until 6 to 12 months after the Federal Reserve hits peak interest rates and leaves them there. We haven't even hit the peak yet, so that means we also haven't hit peak pain. And what I keep on hearing is, well, it's not that bad yet. Well, the crash hasn't happened today, so that means there's nothing to worry about. There's no bad things coming. Well, people, that's kind of like the people on the Titanic. The Titanic hits an iceberg, there's a huge hole in the ship, water's coming in, but the people are saying, well, the ship can't sink. The ship will never sink. Yes, there's water coming in, but we won't sink. It hasn't sunk yet. The ship hasn't sunk yet, so there's nothing to worry about. Well, we all know what happened to the Titanic. Yes, it did sink. And what we have right now is the economy has been hit. It's got a crack in it. The economy is going to go down. The markets are starting to show some cracks in it as well. And yes, while we haven't had the crash yet, the inevitable will come. It's simply just a matter of time, and you have to have patience. These things don't happen overnight, next month. A lot of people that comment on these videos that say, oh, the crash hasn't happened yet. They've probably never seen a full-on crash, or they've probably never lived through a full-on crash like 2008. That took about 18 months for the market to hit its bottom after its peak. So again, I know on YouTube, when you put out these videos, people want to see the market crash 50% in one day. That's not how it works, ladies and gentlemen. That's just the tip of the iceberg. We do have more signs the consumer is in big trouble. So I mentioned this previously, but the proportion of subprime auto borrowers that are at least 60 days behind on their payments has just surged to the highest level we've seen since 2008. So again, we've seen comparisons to the Great Depression. Now we're seeing in the auto sector and auto loans is a comparable to 2008. And I think we may start to see people fall behind on their mortgages as well. On top of this, 57% of Americans don't even have a $1,000 emergency fund. So when we do get another economic shock, the consumer is not going to have the savings there to withstand the storm like they did in 2020 when they were given free stimulus checks. But wait, there's more. We just got more announcements today. It seems like every single day I get article after article, more companies are announcing layoffs. Look at this. Look at this. PayPal is going to lay off 2,000 employees in the coming weeks, about 7% of the workforce. So I think it's the unemployment rate and layoffs it's going to be the match that lights this economic downturn, because people have been hanging on because unemployment has been so low. But once people lose their income, it's game over. And that's when we're going to see mass defaults and mass bankruptcies. And another thing people were able to do during past downturns was refinance and take equity out of their home when interest rates would drop lower. But they're not going to be able to do this time. And look at the latest housing market data that we just got. So look at this. US home price inflation slows further in November. So house prices fell another 0.6% in November. Again, this data is lagged. I think when we start to get the data for March to June, when they do the year-on-year comparisons for when the housing market hit its peak around June 2022, we're going to start to see significant price falls. And we have already started to see some price falls like 25% in the Bay Area, etc. So people's real disposable income is falling, layoffs are coming, home prices are falling. So what do you think the banks are now starting to do? Look at this, everyone. So look at this. Banks brace for more consumers to fall behind on their loans. Delinquencies are rising, prompting lenders to add to rainy day funds. So on the one end, you have the banks telling you, buy. The bear market's over. Stocks are about to go to the moon again, but behind the scenes, they're setting aside billions and billions and billions because they know there's going to be mass delinquencies and mass bankruptcies. And they're calling it their rainy day fund. What I think they're doing is what we should all be doing right now, hoarding cash on the sidelines, because we're about to see some absolute bargains when this recession that could even rival the Great Depression like we're already seeing really hits. We're going to see homes sell for pennies on the dollar. We're going to see cars, if you're in the market to buy a car, a dream car you've always wanted, they're going to be sold. We've seen car prices skyrocket during 2020, but they're now starting to fall, and their fastest pace are on record. We're going to see boats, RVs fall. And if you think you've missed the bottom and you've missed out on the rally in the stock market, there's going to be absolute bargains, I think, over the next 6 to 12 months when reality finally hits, and also some bargains with cryptocurrency as well. So everyone, just because the market is going up, just because you see those charts going up, don't FOMO in. You have to do some real critical thinking. Don't follow the herd. Look at the data. See what the data tells you, and then make your own decision if you think now is a good time to buy. So for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.